Welcome back. You're watching Real Estate. Although major real estate markets are facing a drop in the number of transactions and witnessing softening in prices, experts believe that this could be the best time to invest in real estate, as a further correction in prices seems unlikely. Moreover, with festival deals flooding the market, potential investors may be able to clinch handsome deals. Ruchi Bhatia gets us the story.
High inventory, delayed deliveries and sluggish sales are marring the real estate sector. But if you're wondering whether to invest right now, let me tell you, do not let this time slip out. According to experts, one should make the most of the current slowdown in the market, as it will give you a perfect opportunity to enter and help you catch the bottom. For a potential investor in the realty market, cities like Mumbai and Delhi had seen their peaks long ago and are no longer a viable option. But do not get bogged down by this. Experts believe untapped markets like Hyderabad, Bengaluru and Chennai will offer you great opportunities. Affordability in prices, good infrastructure are the key reasons behind investors flocking to these areas. Moreover, these cities have a comfortable supply of ready-to-move-in homes, ensuring that you don't have to wait for your dream home.
Hyderabad market is relatively at a lower end of the price segment, and with a lot of growth going to see in that city from infrastructure is already in place. There is a demand driver because of a lot of IT things are happening, and definitely that market see a huge amount of appreciation. Second market would be the Chennai market. Again, there are a lot of driver in that market for the growth, and if you enter into that market, there's a huge amount of demand being generated and there are not enough supply over there.
Experts say that from a 5-year horizon, certain areas in these metros could see a whopping 150% appreciation. A November 2012 report by Knight Frank reveals that prices may double in areas such as Ulve and Wadala in Mumbai. Meanwhile, Dwarka Expressway and Noida Extension in NCR may see a rise of almost 110%. It also says Hebbal and KR Puram in Bengaluru and Pallikarnai in Chennai may witness doubling in prices by 2017, making it a great time to invest.
I believe it's the best time for a consumer to decide, make decision and book a property. Otherwise, what happens once little economy takes a swing, maybe, which I am hoping another 3 to 4 months should have a little swing time, because government has become really serious and they are clearing the project faster. They are really concerned about GDP growth. The good part is new governor is looking the positive growth in the economy may shoot up the real estate prices. Before that, the consumer need to make his own decision.
The upcoming festival season may also bring in cheer for the buyer. Struggling with severe liquidity crunch, realty companies are offering discounts to boost the tepid demand. Offers like free car parking, free stamp duty registration, free maintenance are being given to lure investors. Developers feel that these discounts will be rolled back at the first signs of economic revival, indicating that the prices will shoot up again. Meanwhile, the developers' body Naredco says any price correction is unlikely. With cement prices having risen 30% in the past 6 months, any price cut will strain their own balance sheet.
So if somebody has, I don't think the inventories can be liquidated by these swaps. The inventories can be liquidated depending upon the type of project. And if the project is good, the inventories won't stay.
But there is a downside as well. High interest regime by the RBI may spoil the party. Experts believe high funding cost will pinch you if you are taking a 50 to 60% loan for your investment. So if you are unwilling to part with your money given the tough economic conditions, you might want to sit on the fence and wait for some more time.
Moving on, being unaware of the hidden costs while purchasing your home can throw your budget totally off track. Hence, it is mandatory to check the charges that your builder might add to the total cost of the property. In our special segment, Did You Know?, Urvashi Mukherjee gets you the checklist of the sometimes hidden charges that you should keep your eyes open on before buying a property. Let's take a look.
Always check your agreement for external development charges. It includes the charges that the developer might incur on maintenance of water supply, sewerage, drains, roads and common areas. It is also advisable to check for the internal development charges. Paving of the footpath, street lighting, turf and plantation of trees in the common areas are included under the internal development charges. Do remember that you will be charged extra for a flat having a better view. In case your flat has a sea view or a garden view, you are liable to pay preferential location charges. Interest-free deposit for maintenance services is another charge that you as a buyer must look out for in the agreement.
The developer has to pay everything except for the stamp duty and the registration charges which the purchaser pays. Now when I say everything means whatever expenses are incurred in development of the building or for the betterment of the building till the time the society is formed and handed over, the developer has to bear those charges.
Some developers also impose a transfer charge for transfer of the property by the buyer in favor of a third party. Do make sure you make a note of how much you will shell here. Provisions regarding transferability of the property should be clearly incorporated in the agreement. It is also important to remember that the builder cannot charge you for stilt and open car parking spaces. It is vital to ensure that if a builder has charged you for society charges and club membership charges, these are clearly defined in your agreement. It is also mandatory to ensure that whether these charges have been included in the sale price or are to be paid over and above the price of the property.
Time for a quick break, but to get our expert opinion on your property matters, feel free to call us or email us. The details coming up on the screen. After the break, we take up all your property-related questions in our special segment, Ask Real Estate. Keep watching Bloomberg TV India.